Hey, Dan Fitzpatrick here, stockmarketmentor.com, and I want to look at Snap here, or as I call it, Snap Twit, probably because only twits use Snap. I don't know, but that's what I call it. So anyway, so you know the company had some, shall we just say, some dismal news on Thursday, and that led to this big, massive implosion on Friday, just this morning. It gapped down 20%. I know on Thursday night it was down even lower than that. And it looked actually like it was kind of setting up to be a pretty good trade to the long side. And typically, you see a stock that gaps down as much as this did. You flush out all the suckers first thing in the morning. That are selling in a panic. They got to get out before everybody else sells, and of course they're all rushing to the exits at the same time, which means there's only up to go for the stock. Okay, so this looked like it could be a heck of a snapback. I actually bought just a little of it and kept a real tight stop, and then within 10 minutes my stop was hit. I know that because I heard the ding in my software. But the bottom line is, so then the stock traded sideways, and we got a 1-minute chart here, and it traded kind of sideways to down. Okay, so now let's take a look at things that matter here. So this is the way this went. Standard deviation, Bollinger Bands. 2 standard deviations. These are supposed to contain like 90% of all closing prices. This is closing prices. If they go to 3 standard deviations, which I'm going to show you here, basically it's against the law for the stock to close outside 3 standard deviations, yet here we are. The stock closed outside 3 standard deviations. But wait, there's more. Let's go to 4 standard deviations. Now, 4 standard deviations down, the bottom band here is 55.03. The closing price is 55.09. So basically what I'm saying is at 4 standard deviations below the 20-day moving average, this is actually a capital offense. I mean, this isn't a misdemeanor. It's not even a felony. Like, this is a capital offense where the stock is down this much. And so I'm giving you the setup for Monday, and I'm giving it to you right now. This stock desperately needs to bounce, but you can't anticipate it bouncing. You can only watch for it to bounce. So here's the deal. The low of the day was 55 bucks. It closed up only slightly. So the low of the day was 55 bucks. There's 2 ways that this could go. We'll just do an hour, nah, screw it. I'm just going to keep it on the day. There's only 2 ways that this can go, and I'm going to give them both to you. So if the stock, there, I had to create a couple arrows. If the stock trades below 55 bucks on Monday, don't buy it. Stay the hell away from it. Pardon my cursing. Stay away from the stock if it trades below 55 bucks. However, if the stock starts to trade back above 55 bucks, that's when you buy it. And where would your stop be? Why, just a little bit below 55 bucks. Give it literally like 50 or 60 cents. But this $55 mark is the line of demarcation between buy, don't buy. If it gets back above here, you buy it. If it doesn't get back above there, then guess what? The sellers are not done selling. Don't try to get them to hurry up. Just step back and wait. So that's your trade for Monday morning. Okay, I'm Dan Fitzpatrick, Stock Market Mentor, and this is Fitz in 5.